Hello, everyone. Welcome to Fundamentals Unfiltered. I'm Matt with the Fundamental Investing Institute. We are recording this on Sunday, November 23rd, 2025. On today's episode, we're going to be discussing Charlie Munger, the late partner of Warren Buffett, vice chairman of Berkshire Hathaway. So because we're recording this on a holiday week with the Thanksgiving holiday, we're doing this a little early. The only big thing in capital markets over the past week or so has been the continued Bitcoin sell-off. And I was going to talk about this a little bit. I wanted to give it another week. One, because I'm interested in seeing if it recovers, because whatever this is, it's a very volatile asset. And I'm curious to see if the Bitcoin sell-off is still news in a week. But I also wanted to discuss Munger. Charlie Munger died at 99 2 years ago this month. It was late November 23. He passed away. He was just shy of his 100th birthday. And I wanted to touch on some of the lessons that really came from his career. So if you don't know who Charlie Munger is, he was the vice chairman of Berkshire Hathaway, Warren Buffett's business partner, very close friend. I mean, they were almost identical twins. Buffett was a little different in that Buffett is very much concentrated on business and finance. Munger had a much bigger variety of intellectual interests that kind of made him more interesting in a lot of ways. And also, he was very much an advisor to Buffett. He was someone who Buffett always threw ideas around with. And Munger lived in California, whereas Buffett, of course, lived in Omaha, still lives in Omaha. But they would communicate by phone all the time. So a little about Charlie Munger. He was born in 1924. He's actually from Omaha, Nebraska. Didn't meet Buffett until much later. He initially studied mathematics at the University of Michigan, but he dropped out in order to join the Army. This is during wartime, Second World War. And he tested off the charts and whatever standardized testing that the Army had at the time. And the Army actually sent him to study meteorology at the California Institute of Technology, also known as Caltech. So he studies meteorology for some time. The reason meteorology was so popular during the war is it really helped with military logistics. That is, if you understood the weather better, you could plan military operations better, obviously. But this was something that was just coming into at the time. So he leaves the Army, actually doesn't have a four-year degree, but despite that, and despite all of his intellect and talent, he gets into Harvard Law School, graduates with the Juris Doctorate in 1948 from Harvard Law School, and he practices law throughout the 1950s. And during this time, he invested very heavily in real estate. Munger was actually a real estate developer, so he loved architecture, and he would build apartments and other properties. But it's in 1959 that he meets Warren Buffett. I think Munger was actually in Omaha to settle some family matters, I think with his family's estate. And there he meets Buffett through a mutual friend, has dinner with him. They hit it off right away, but it's at Buffett's suggestion that Munger ends up starting an investment partnership, which he does in the early 1960s, and he runs that partnership through the mid-1970s. So basically, he quits law. Now, he always had his name on the door as a partner in a law firm, but he wasn't actually practicing. He was one of the founders. So he starts this investment partnership, very similar to what Buffett had started, and he was making a lot of co-investments with Buffett, so they were throwing ideas off each other even at that point. One of the co-investments is a company called Blue Chip Stamps. What Blue Chip Stamps did is they would sell these, they were almost like reward stamps that retailers would have. And really not used anymore, but at the time, retailers would buy these stamps from Blue Chip, and what Blue Chip stamps would do is they would offer rewards to retail customers. So basically what it allowed Blue Chip stamps to do is they could take in cash flow for a time when they sold the stamps, and then it was only much later that the customers would redeem these stamps for rewards. So Blue Chip would have access to that cash. And what Buffett and Munger figured out is it gave them use of that cash to make other investments, and that's something called financial float. And it's something that Buffett and Munger would use brilliantly when they bought insurance companies. It's kind of the same idea where in an insurance company, you take in money, you get to use that money before the payouts are actually made. So this use of financial float was hugely central to their career, but they're doing it with Blue Chip stamps in the 70s, and the biggest acquisition that they made at the time, and it's one of the most noted acquisitions that they made, is a company called See's Candy. It's still around, and it's still owned by Berkshire Hathaway, but it was actually originally acquired by Buffett and Munger through Blue Chip stamps. I know this product intimately, not embarrassed to say the chocolates are delicious, so I have here their holiday calendar just to show that I'm still a customer. But anyway, when they bought Blue Chip, this is an important acquisition because when they bought See's, they bought See's through Blue Chip. So when they bought See's was being sold for $30 million, and Buffett was very much a value investor, kind of in a strict definition of the term. So, he learned from Benjamin Graham. And when Buffett was operating his partnership, he really focused on companies that were selling at near liquidation value, and he was focused on a metric called tangible book value. Tangible book value is simply the value of a company's physical and financial assets minus all liabilities. So it excludes any intangible assets like patents or goodwill. It focuses only on the physical and the financial assets. Financial assets would be things like obviously money in the bank or marketable securities. So that's what tangible book value does, and Buffett would always prefer to buy companies that were selling at a low multiple tangible book value. Well, at the $30 million asking price, this was very high relative to tangible book value, and it was also very high relative to near-term earnings. And it was Munger that really got Buffett to stick with it. So Buffett ends up offering $25 million for the company. The family, luckily for Buffett, the family agreed because Buffett has said before that if the family would have countered below $25 million, he would have walked away, and they would have lost one of their greatest investments. See's over the years produced billions of cash flow, which Buffett and Munger had put to work in other acquisitions. So it's an investment that made Berkshire Hathaway shareholders a lot of money. Now, again, it wasn't initially bought through Berkshire Hathaway. It was bought through Blue Chip stamps. But Berkshire Hathaway would eventually buy Blue Chip stamps, and they did so with a stock swap. And it was through that stock swap, the acquisition of Blue Chip stamps in the early 1980s, that made Charlie Munger a material shareholder in Berkshire Hathaway. And it was during this time that he was named the vice chairman of Berkshire Hathaway. And of course, he held that position until his death in 2023. So that brings me to my book recommendation, because if you're interested in learning about Charlie Munger and his philosophy, there's a great book called Poor Charlie's Almanack. This is specifically similar to, or the name is chosen based on Poor Richard's Almanack, because Munger was very much an admirer of Benjamin Franklin. So it's called Poor Charlie's Almanack, and what this book is it's a compendium of different talks and other material that Munger had left over the years. It's compiled by a business executive named Peter Kaufman, and there have been subsequent editions of this. I think this one I have is the 4th edition. It came out in 2023. When Munger died, this book was sold out for a while. So it was actually a bit after his death that that the newer edition was even available. I was unable to get it until I think maybe January or February of 24. It might have actually been later. But in any event, I had earlier editions, but there is some new material in this 23 edition. But the book covers a lot of different ground. But I wanted to talk about and highlight two things that I think are Munger's biggest intellectual contributions to business decision making. The first is a concept that he calls a latticework of mental models. And this basically is the benefit of studying a variety of subjects. Munger was interested in a lot of things: mathematics, physics, biology, history, all sorts of other subjects. And he's talked about, if you're a decision maker, there are big ideas from these different subjects that can be employed. So it gives you a variety of tools with which to make decisions. And I know over the years, Poor Charlie's Almanack has been one of the most widely cited books read by business executives, and it is just a absolute wealth of knowledge in this book. The second idea, which is somewhat related to the first, but it's kind of more geared towards academia, is what Charlie Munger rather calls a multidisciplinary approach to learning, and this goes for really any subject. The idea of a multidisciplinary approach to learning is that when you're studying a subject, the knowledge of that subject, the insights from that subject can be greatly enhanced when you cross that subject along with other subjects. So economics is a good example. In economics, I think students are incredibly, let's say, well compensated for studying subjects such as psychology, sociology, anthropology, and several others. Certainly history comes into play, but if you can kind of integrate insights from these other disciplines, the study of economics can be greatly enhanced. Likewise, these other subjects can be enhanced by studying economics. I think finance is another good example, and I was thinking about this kind of in the age of AI that we live in, where a lot of students are studying finance and they're studying the quantitative side of it, which is very important. I'm not marginalizing that by any means, but just knowing how to build a cash flow model or use Excel or understanding, the various formulas that are used in financial analysis is really no longer enough. That is, students of finance, if they're just studying these things, they're at risk of becoming a second-rate algorithm, as one author put it. And it's enormously beneficial to study the quantitative methods alongside of, the natural history of the various ideas in finance, the natural history of capital markets, of economic ideas, and there are a variety of subjects. Certainly psychology comes into play, but there are a lot of different subjects that can come into the study of finance. You could say this about really any subject, but this is one of the things that Munger has talked about, is how people within different academic disciplines can greatly enhance their understanding. So Munger was very much a polymath, but I'll end by saying anyone that is really interested in knowing more about Munger's ideas and his intellectual contributions, this is probably the best. This is the best place to go. Poor Charlie's Almanack. He's gives a number of talks over the years, and they are memorialized in that book. So with that said, we're going to cut today's video a little short. Holiday coming up. I wish everybody a happy Thanksgiving. Best of luck in your investment endeavors. And hopefully when we come back after the holiday break, we'll see what is going on with Bitcoin and some other things. If it's worth talking about, we'll dive into it. But until next time, thank you everyone for tuning in.